This is a look at my 930 opening range trading strategy. First, before I break it down, let's go over the rules. So the first thing you do, get to your charts, you mark out the midnight open and the 8:30 open. You mark out your nearby buy side, sell side liquidity. Preferably these are relative equal highs, relative equal lows. After you mark those out, we wait for 9:30 to open, and then you wait for price to manipulate some form of liquidity or opening price. This is going against your intended direction. And then you target the other side for the other side's liquidity. We look for displacement in your entry model. This can be a fair value gap, an inversion, a breaker, order block, whatever you decide to use. And we target low-hanging fruit. So let's look at this trade on Monday. As you can see, we marked out our sell side, we have some buy side, our midnight open, our 8:30 open. So we are below both of the opening prices. So this is a bullish bias since we want to see price trade back up to midnight. So let's see, this is the 928 candle. So 29 and 930 when price opens. Right away we manipulate down lower to this liquidity down here. So that's looking like a bullish setup is coming. So we mark out this bearish fair value gap, wait for price to close above it, and look to take price long right here. This is where we would enter. Our stop could be below this wick. And let's just say we aim for midnight. That's a 2.28R. Let's see. I always take partials and then go break even on the strategy as well. So we'd probably go break even and take partials at this 8:30 open. So let's see. Okay, so stop would be break even now. We would have booked some partials. Depending on how many contracts, you could take more off at this high. So boom, you could have took more partials, and then right there we hit midnight open. So we would be out of the trade for a, what was that, 2.2R, I believe. So that's the basics of the strategy. To break it down in simple terms, you wait for price to open, see which way it manipulates. It manipulates lower here, obviously. Then it starts to show very bullish price action with big green candles, disrespecting this bearish fair value gap. Trades off of it, immediately runs for buy side and midnight open. That's what we're looking for. You would have been done by 9:49. So 20 minutes after market opens, you would have been done for the day. Let's look at our risk management rules here. So you take your first trade. If you win, you're done for the day. That's what makes the strategy so good, because you don't have to focus for very long. You just have to nail your first trade and then you're done. And that compounds very well. If your first trade's break even, you can take one more. If your first trade's a loser, you can half your risk and then you can take one more trade. This prevents you from going full tilt or losing too much on one day. So you can refocus for the next day. And no matter what, after your second trade, you're done. So 2 break evens, you're done. 2 losers, you're done. If you win, you're only supposed to take 1 trade. That's the strategy I follow. I'm going to take a screenshot here of last week's trading journal to show you the results. Snip it here. Alright, let's drag it over. So this, can we make it bigger? Alright, so this was last week on my eval account, which I passed. Made about 2,800. 1 trade every single day was a winner. You can check my YouTube shorts to see those trades. And I'll put the Friday's final trade, this $1,200 to pass the eval. I'll put that at the end of this video so you can watch the live trade. But let me know if you have any questions. This is my strategy and it's made me profitable, so you should try it out.